Welcome and thank you for attending my webinar. Now, today is Monday, the 29th of March. This is Bretton's Financial Trading Academy's Monday's week ahead. So let's look at the markets a little bit before we go into the technical side of it. So I have seen, I've watched quite a number of videos as well with regards to the Suez Canal, and there's quite a number of news release. I mean, there was an issue with the Suez Canal. It's basically one of the best route of oil transportation, especially the WTI, the Western Texas oil. So it's one of the canal that is really very busy, very busy in connecting east and west. Okay, so the European side of it is connected to the Asian side of it via the Suez Canal. So a couple of probably days ago, almost a week now, they had a big problem with having the what do you call that, cargo ship shipping the oil was actually, it's a bit of an accident, so it toppled and it blocked the canal. So that has actually caused the price of oil to go up. Now, as of early today, they managed to free that. So now the oil price has begun to actually fall. Okay, so because the demand, the supply now has actually decreased. Before, the demand was really high, the supply was lacking because of the block of oil. So oil prices as of this morning has actually begun to go down because of the freeway now with the canal. So that was good. With regards to various other issues at the moment, one of the burning issues at this moment of time is the worsening of the COVID situation in Europe. And with Merkel, especially in Germany, she has basically threatened the use of federal law to toughen pandemic restrictions. So it's going to go through the whole thing as of the beginning again in Germany when the COVID started, with lots of restrictions and various other things. So that would follow through with Germany, France and Italy as well, and these are the major economic powers. So with that, roughly as what's going on and what has gone on as of Asian Open, and then we've got news late last night talking about the worsening situation in Germany with COVID and all that kind of thing, has now begun to push down a little bit the Euro USD that we have been watching as well. So let me just make sure it is zoom in. So with that, this is just in the daily chart itself. Let me move myself there. And with that, you can see that it's begun to move, and I have got the ADX, average directional movement index, as well. So we're looking at a couple of things that may move the market a little bit better this week. So now we start off with the most traded pair, Euro USD first. And as you can see, on the daily chart itself, we've got that candle moving down, even though it's actually quite tight or small, as you can see visually, the last candle at the moment on the daily chart, it's looking quite good as a candle itself. Why? Because it's got no wick at the very top. No wick at the very top, meaning that it's got some more room to actually fall a lot more, and there is no hindrance or obstacles on the upside. So that's a very good sign when you look at the candle on its own. Now, I've got my trigger price in green right here, basically at 1.1770. Now, I was at a float as well for Euro USD as of last week, but I didn't close my trade and I left it like that. Now, the other thing that is actually a little bit of a good news in terms of Euro USD selling, for those of you guys who are selling maybe in float, there may be a high possibility that you hit your TP this week, maybe the beginning of the week, today, tomorrow, we never know, right? But with that, I have noticed a very nice rejection candle. As you can see, that rejection candle right there was the main reason why I didn't close my Euro USD trade, and I let it run. And of course, yes, I was in a floating. When I checked, I traded at one lot. As I checked last couple of days, I was floating about 500 plus US dollars, and basically now it has cut into half. So it's about 200 plus floating at this moment of time with Euro USD, which is a good news. Now, that was the main reason as well of why I have actually not closed my trade and I left it. But the other reason as well is that that confirmation candle of a rejection telling me that the wick is really long at the very top. So that's like a pin bar type candle. And usually it tells me that, it's going to be very tough to actually go above that level, and it's starting to actually go down quite a lot. So that is one of the reason, but that pin bar is a confirmation for me on the technical side of it, with what has been going on and not very well in the in the European zone. So in Europe, now things are worsening, especially on the COVID situation, and that has been weighing down the economic side of it. So the COVID, has actually gone into political decision making as well, like what Merkel has actually decided this week, and then that has also weighted down on all the economic efforts, businesses suffer and things like that. And mind you, Germany is the top, one of the top three, and it's the highest contributing economy in the whole European zone. So it's really important what they decide as well can actually pull down the euro or rise up the euro, depending on what they have actually decided. So it's still looking good. In summary, Euro USD selling is still looking good. I like the way the candles are actually moving as of this morning on Asian Open with no wick at the very top. So it is actually pushing down. Now with that trend side of it, it's looking good. Now, in terms of confirmation, timing to enter and all that, it might still take another couple of hours or so until London Open, and then you might be able to see more momentum and volatility rising as well. So that is actually good news for us traders selling the Euro USD. Apart from that, we are also using the ADX, the Average Directional Movement Index. When you go on to insert indicators, and you don't need to change the parameters or anything like that. Just click on average directional movement index. Now the directional movement index itself, or the ADX, we just want to look at that blue line right there, and then you need to insert the level 25. So when that blue line is above 25, it's just telling me that the current trend that you're looking at, whether it's an uptrend or a downtrend, when that blue line is above 25, it means that whatever trend you're looking at is strong. It's on the strongest side. So when I compare 1 hour, 4 hour, and daily, I get that strength of the Euro USD on the downside. So that means the strength of the downtrend or bearishness of the Euro USD is actually picking up and is actually strong. Now, the reason why I use ADX as well is that some of the traders may actually realize it may be a little bit difficult sometimes to match up the trend with the volatility, meaning that the movement, sometimes traders, they do realize that they know that the trend, they've got the trend right, but then they're just sitting in front of the computer waiting and waiting, and then there's just no movement as well. That is also one of the reasons why ADX is actually quite good when you compare it with the 1 hour, 4 hour, and daily. It's not a standalone very user-friendly type indicator which is really accurate and all that. It's got a lot of lagging in it, but then you need to use it not as a standalone. You need to actually combine the ADX with the RSI a little bit, with the RSI with the stochastics as well. So the way I use the 3 indicators, I mean, that's the most indicators that I use, but then I use it in a total different way. Okay, so here, for example, let me get the ADX out first, and I will insert the RSI. Now the RSI, I use it only to actually draw trend line on the RSI and compare it with the price. It's quite interesting, but I've been using it like that for a long time. But sometimes I find that If you use it that way, then you don't get overly dependent on the overbought, oversold side of the indicator, which basically for me it doesn't really work because it's got a lot of lagginess. With the RSI, your parameter is 5, okay, and number 5. So that means if you go on to here, when you edit it, see the level there. I don't bother about it. You can delete it, even it doesn't matter. But then here on the period, sorry, not parameter, the period, you want to put 5 on there. Okay, so once you've done that, basically you see it like this, right? So, okay. Now I'm looking at the daily chart. Now I just basically have as many touch point on the support side of it. So I've got one touch point here, 2 touch point here, right? Okay, right. And then you draw the resistant one, and then you can draw the resistant one, the support one as well. So let's me you just want minimum 2 touch points. You got 3, even better. Okay, so let's just do it like this, roughly like that. Okay, or you can take the lower one here, take this lower one, push it down a little bit. Okay, just so that you get an idea of where does it actually stand at this moment of time. So I don't use the RSI as an overbought, oversold. I just want to see that, okay, at least it's clearer here on the RSI that it needs to, it is still going into this area. So I do it like a triangle, whatever that I would draw onto the Euro USD as in trend line and triangles and all that, just to see where is it going and how is it going to break out. I find it a bit clearer here. Okay, so it hasn't actually broken out. It hasn't actually broken out here. Once it has actually broken out here, then you see that this would actually move much better. So I use RSI in that way. Okay, now the next indicator as well is the stochastics. Now, stochastic is interesting. If you use it as divergence, convergence to actually tell you whether or not there is a reversal. Okay, so reversal of the current trend. Now, with the, let me just put it on first. You've got the stochastic. You don't need to change the parameters, just leave it as it is. And then you click on OK, right? So here, for example, let's go on to a short time frame. Divergence, basically, I'm looking for divergence, basically means the opposite, whether there is a mismatch between the candlesticks and the stochastics. But what is the mismatch? The mismatch is when you look at the peaks right here, and also the support. Okay, you can actually do a line that connect one, like here, for example, you've got 2 peaks here, right? So you connect it like this, yeah? So that is a slope down between this peak A here and this peak here. Now that resembles this peak and this peak. Now, if I do it like this peak to this peak sort of mirrors each other, right? So if it mirrors each other, there is no divergence. It's called convergence. So hence the reason you've got a downward slope, you've got downward slope. That means that current trend has got no reversal at the moment. But if you find a convergence, then there is a reversal. So here, for example, you've got from this peak right here and that peak right there, it is still mirroring each other, correct? So there's convergence. That means there is no reversal yet. So that is basically what it means. And when I put this what do you call that, stochastics on the Euro USD on the 4-hour chart, I'm just looking at, hey, whether or not there is divergence, because I want to know whether there's a reversal or not, because I don't want to get overexcited with my with the selling of the Euro USD. Of course, Euro USD, we've got checklist, right? We've got the checklist on the fundamental side of it. Okay, things are not looking good in 3 main top industrial countries like Germany, Italy, and France are not doing well with the COVID as well. A lot of things are going to be potentially pulling down the euro. That's good on the fundamental side. Okay, so then I check the technical side of it. It does actually look good in terms of trend as well. But then I don't want to get too excited, and I just want a little bit more confirmation to tell me whether or not there may be a reversal. The answer to that is that when you put the stochastic, there's more convergence, not divergence. So, which is a good sign, meaning that there may not be um, a reversal coming up soon, which is very drastic. So that's a good sign. So that is what I have to say about the Euro USD. So we can relax a little bit with Euro USD. I mean, me as well, because I think I have it running, since last week or even a little bit more than that. Also, I entered earlier. It was floating quite a lot, almost 600 USD as of Friday last week. And then actually a lot more than that. And then it just simply cut down on its floatiness. And as of today, Monday, the 29th of March, it looked a little bit better. So here, in terms of trend analysis using all the exponential moving average for Euro USD, it's looking good as well. You've got all the three lines showing you very nicely. It's on the downside, especially up to the 4-hour chart. But on the daily chart onwards, it doesn't really give me that. So that's hence the reason still you shouldn't be overly excited in terms of the falling of Euro USD too much, okay? But there may be room for it to fall and for us to hit our TP at least. And the TP here, as of planned last week, mine was here, down here, yeah? So let's just check. Okay. 1710, yeah. So that was my 1770. I managed to have my sell triggered, and then 1710 my TP level. That's about 58 pips or so. Okay, almost 60 pips. So 50 we can say, minus the spreads and things like that. Okay, so that is the area. Now that's just Euro USD. Okay, let's do a little bit of trend analysis right here. Give me a second. A market analysis first, meaning overall, with the heat map and what's going on in the world of trading in terms of currency pairs. What are the focus, especially on action forex. Let's say we go straight on to the top movers first. Give it a bit of an idea, which pairs has been paid more attention as opposed to the other ones. Now, here itself, you've got the four dots here, right? Now, the four dots, if you've got a straight line four dot dotted on the 4-hour, the daily, the weekly, and monthly, that means that is telling us that the NZD USD is quite clear in its trend, in its current trend at this moment of time, which I would presume it's a downtrend, because you see you've got negative in the change area there. That means a lot more people are selling the NZD USD. We'll check on NZD USD as well in a bit. But then this one here is giving us clear indication of trend in 4 time frames. So that is why I like looking at 4 dots first, even though NZD USD is not right up there. Okay. But here, when we look into the list of top movers from number 1 to number 10, we can see that the concentration is sort of towards JPY pairs, right? JPY crosses, and then you've got CAD, JPY being the top right there. It's a selling on the CAD, and then it's a selling on the NZD, it's a selling on the AUD. So what does that mean? That means that there may be risk on and risk off environment, because people are putting their trust onto safe haven like the JPY. So it also means something is going on in Japan as well, and it's attracting people to buy the JPY. Why and things like that. It'll come through the news and give us more reason to believe that we need to actually buy the JPY as well. So with that, so here you've got the indication at this moment of time. What I will do is I will just pay a little bit of attention to NZD USD. So I'll write it down as NZD USD, because I'll put a little note there, because top movers there, it's got 4 time frames all indicating that it's clear in its trend. So that is on the top mover side of it. But let's also go onto the currency heat map. Okay, so currency heat map itself on Action Forex. I also see that the main column, especially on a daily chart, that is all dark blue will be the CAD. So what that means is that all the currencies on the left, they are extremely bullish against the CAD. So this is telling us that the CAD is extremely weak. Okay, so we've got CAD that is really weak. Now, why would that be? That probably is connected to the oil, okay, to the oil prices that has actually gone down because of the Suez Canal that we talked about. So the Suez Canal has been freed so that we have got loads of people buying the oil now because of the demand is rising and the supply the supply is there right now and the demand is falling. So we are seeing oil prices because it's connected to Canadian dollar a lot because they are one of the oil producers. Let me see whether I have admitted people into the room. Okay. So that is basically it. So we have got CAD on the upside, on the downside. All other pairs are on the upside against the CAD. When you look at the 4-hour chart as well, okay, daily is a bit more clear. We have got a lot more dark blue column right there. So I just want to go through this heat map and I want to look for which pair or which currency specifically has got all these columns that are either dark blue or dark red. Okay, so at the moment it's still a bit too early. We have got a lot of mixes, but then on the JPY itself, it does look like bullishness is picking up all across the pair. We don't have the dark blue too much, but then the blue is building up, especially with JPY against CHF. Got all the blue there building up already. So yeah, that's it. That's probably the clearest one is the JPY at the moment, being really getting into the bullish side of it right there. Okay. Then we go on to action bias as well, just to get a little bit of extra information in terms of the trend. Now we want to look at the whole row, not the columns, but the row like that, whether or not you've got all straight blue or all straight red at this moment, still a little bit too early. Okay, now we get back to the heat map that is from Forex Early Warning right there, just to get that confirmation again in terms of trend, in terms of participation of market on each pair. Okay, so here on the USD crosses, we can see that we have got still bearishness of other pairs compared to the US dollar. So US dollar is still picking up. And one of the ones that is really clear with this trend, because the Canadian dollar is really falling because of the oil prices, then we've got USD Canadian dollar seems to be quite clear in its trend, but then on the European session doesn't actually look that way yet. So it's not, but maybe what it's trying to tell us is that you can actually write down USD CAD as well as a potential of an upside move or a new trend, beginning of a new trend. So we want to take a look at the USD CAD as well. Okay, so USD CAD is one to look at, as well as Canadian crosses, of course, but NZD USD is probably one to look out for as well in terms of selling. Now here, it's quite clear in the Asian session, as you guys can see, all the pairs versus the JPY, it basically just plunged, and then it's building up probably in the European session, maybe a little bit early or not just yet, because London hasn't really opened yet. It will very soon, half an hour or so. So here, for example, we have a lot of selling of other currencies against the JPY. So JPY is really picking up, has picked up a lot of buying interest in the Asian session. What we want is we want to look at this. So JPY on the buy side of it is what we want to look at as well. So we potentially have got quite a number of trading opportunities this week with regards to what is actually happening now, especially JPY crosses, USD crosses as well, major pairs. Why? Because we've got the AFP before the NFP on Wednesday to tell us a little bit more about the job market, employment, unemployment in the US. So this is something that will actually rise up volatility, because this Friday will be your NFP again, okay, for this month, for last month, of course, but it's the first Friday basically of the month. And we're already in April, and Easter is coming, so we are actually experiencing slowdown in the market in April as well, especially in European markets, including the UK, because we've got a lot of public holidays, Catholic holidays, and all coming up as well in the UK. So that's basically it on that side of it. I also like to sometimes look into the sentiments analysis right here of DX, of daily effects. I know daily effects is part of the part of IG market. Used to be part of FXCM. Now it's actually taken over by IG markets. But this sentiments analysis is a contrarian tool, a contrarian indicator, which basically means that if you look at, let's say here, you've got silver, really, really bullish, it says here, right? Because it's a contrarian indicator, it doesn't mean that it's bullish, and then for you as well, it would actually be a good pair, a good instrument to actually buy. No, because it's contrarian, it means that it is opposite. So the trend would most probably be a sell, what do you call that, indicator as well, but we need to go and check, okay, onto the chart. Now I'll just give you a bit of a demonstration. Let's pick a pair that has got more than 50+%. Here it says mix, so we don't want to touch the mix one. We want either bullish or bearish, okay? So let's see what we have. Perhaps GBP JPY. Okay, so GBP JPY, now remember this, okay, this is really important. When you look into an indicator like this, which we call it like a sentiments analysis, or sort of like a heat map or stuff like that, this is a sentiments analysis. Sentiment analysis means that it measures whether or not there is a net long or net buy or net sell. In this case, it's 69%. 69% has been on a net sell, okay, a net sell. So that means that the GB, because it's net sell, that means most people has been selling. So now the trend might actually change towards buying. So hence the reason it's a bullish right here, but then, you know, the sell is 69%. So for those who are not very familiar with this kind of tool called sentiments analysis, they'll start to go and sell the GBP JPY. But in this case, you can see the word here is bullish, okay, but then the bullish is only 31%, 69% is on the sell. So because it's contrarian, so that does actually mean that, okay, yes, you can follow the word bullish, but don't follow this 69% majority who has been selling. Okay, so this is contrarian, so you want to do opposite of that indicator. So if 69% has been net sell, that means it's time for most traders to actually buy. So that's why it's bullish, and it also matches with what we know about what we have actually seen in the market. We've got majority of buying interest in the JPY, right? So that one goes up, 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 up. This one should be selling, right? So you see how you've got the word there, bullish. So you got the word bullish here, and then you've got net sell as well, 69%. So it's actually very tricky. So we need to look into GBP JPY, of course, because there's a lot of interest there, got 69%, you know, and then 31%. But in my rough guess, GBP is on the downside, not upside, right? Because JPY is basically at the moment on the upside. So there you go. That's a rough mix there, GBP JPY. We can immediately take a look at that GBP JPY as well. So here we've got GBP CAD, maybe pairs that are paired up with Canadian dollar as well is actually good to look into because it's connected to the oil prices. The Suez Canal has actually been freed, so there's a lot of media coverage onto the Canadian onto oil, and oil is connected to Canadian dollar as well. So all Canadian crosses might actually move, but most importantly is the economic calendar as well. Now, as we can see right here, we have got not much or none high impact news today, Monday the 29th, but then starting tomorrow, we've got something with the European zone coming from Germany. So that, in my guess, the harmonized index of consumer prices, because of the situation with COVID in Germany, might actually be negative roughly. So if that number comes up tomorrow being negative as well, reflecting what's going on in Germany, then we have a high possibility to see the Euro USD drop even more. Now, we've also got some more Euro consumer price index CPI as well. So I see all the things that are happening with the Eurozone, the data release, as fuel to make matters worse. Okay, so if it makes matters worse as a fuel, even on Thursday as well, I don't see anything. Friday we have the NFP. Wednesday, day of the week, have the ADP employment. So the ADP, usually it's a precursor of the NFP. So it gives you a bit of an indication what might happen, not accurately 100% for the NFP. So you want to look at the ADP employment as well. So in my opinion, this whole week, starting from Tuesday night itself, tomorrow night itself, tomorrow late evening, US Open time, you might see more movement getting into gear for the whole of Wednesday. Why? Because Wednesday is very packed at the moment. We have got very packed, high impact news, and they all revolve around manufacturing for China right here. So these numbers here for the non-manufacturing and all that would actually impact Australian dollar and New Zealand dollar because they are connected, correlated a lot economically and trade relations, right? So whatever happens in China on that side of it would actually impact Australian dollar and New Zealand dollar. And we don't have any Australian dollar, New Zealand dollar data here, but it would actually be moved by what's going on in China. Now we've also got the European numbers right here, so that would actually be a tailwind for whatever has happened in the harmonized index consumer price as well. So it's going to be quite interesting, in my opinion, with the euro especially. Now, the euro will be connected to the US dollar because of the euro USD. So we will see USD as well picking up, but mainly because USD has its own data that it's waiting on the employment side starting Wednesday. So starting tomorrow, I would guess that things will pick up in terms of volatility, and we should be able to get quite a number of trade going. And also because we may be able to ride from maybe tonight or tomorrow onwards, picking up of European pairs, okay, Euro pairs, Euro crosses. So Euro crosses would actually be quite good as well. So yeah, here we've got that. We've also got another fuel in the fundamental side of it, which is President Biden's speech. So President Biden's speech is quite important on two counts, on two areas mainly. Okay, because you see the yield and all that has already gone sort of like passed through. Okay, but now still the COVID situation, together with its current economic situation, unemployment, employment, housing, retail, all this kind of stuff. So I would guess he would be actually speaking to that, putting into his agenda or priority on the COVID news, of course, on vaccination, how it has been. So if his speech is very positive on that side of it, because those are the worry of what's going on in the US at the moment. Okay, the economy situation being driven or being pulled by the current COVID situation, current deaths caused by the COVID vaccination situation. So we need to see how well he sells the solution and how well he comforts the general public. And then that is basically what is going out through the mainstream media to pull the market down or to rise the market up. Okay, so it's actually quite important. So President Biden's speech tomorrow is very, very important because it's just a day before the ADP as well. So the ADP is on, it's on the same day, of the ADP. So you got the ADP here. So whatever he says would actually impact the employment, non-employment thing that will be reflected by the ADP. And then the ADP is actually something that happens to reflect what may happen for the NFP. So it's all connected, you see. So President Biden's speech would be a bit of a fuel to actually push a lot of USD crosses, whether to push up, to push down, depends on what he's saying and what's actually happening with the COVID situation that basically is pulling down everything if it is not resolved. Okay, so that is it on that side of it. We've also got the GDP for the UK, so that's one to look out for as well. But as I can see it, I can see AUD crosses, NZD crosses, Euro crosses, USD crosses to be the forerunners of causing a lot of volatility and also for us a lot of opportunities to actually trade. Okay, so fingers crossed on that, and I think it would probably be much better than last week because of the layout of things. And I was suspecting that the slowdown was also got to do with the worry of the market in the oil side of it, okay, because the oil side of it was actually a very, very big worry because we have got three super economic powers supplying their oil, and they are very dependent on that with three major buyers as well. We've got, India, South Korea as well. They are all the major buyers of the oil actually. So then that's why everything was a little bit slow, stagnant on the trade side of it. But I see now that everything will start moving as the Suez Canal actually clears up, all the transportation will actually be as per normal. Then it will pick up a lot more. Okay, so there you go. That's basically it on the overall market analysis side of it. So let's look into the technical side of it specifically. Okay, so Euro USD, we've covered that already. It is still moving a little bit on the slow side, but let's look at what might happen in another 1-2 hours time, because we've got nothing on Monday today, but we've got that for tomorrow. But we just want to take a look at the news, but plan our days ahead. Now, here on the RSI for GBP JPY, if I draw the trend line here, right, like this, you can see that it has broken the trend line and is giving us an indication that the downside is going on at the moment for the GBP JPY. So that does actually then give us a bit of an indication that GBP JPY is on the downside, the JPY is on the upside. And if we now insert the ADX will then function as a strength indicator telling us, hey, whether or not we are going to be waiting for long again, whether there will be candles going down quite a lot or not. The answer to that is most probably yes, because we've got strength. The trend is strong on the downside, mainly because of the downward movement. We've already laid out some what do you call that, resistance support zone is actually crossed over on that one. This is on the 4-hour chart. Daily chart, we can see it's still not very clear on a downward type trend, but perhaps we are looking at maybe a change of trend. Maybe the selling is going to be happening quite soon. Here, for example, on the 1-hour chart, we have got that break already to the downside. So sometimes I see that the RSI, even if it is a lagging indicator, if you use it in a little bit differently, not as the common way of overbought, oversold, like drawing this trend line right here, for example, it's giving us an indication that there may be chances to the downside, but here it's not clear yet, but it may actually be happening soon. So we want to monitor that as well, especially with the JPY moving up. Let's look a little bit on gold. Gold at this moment of time, because of the USD strength, it is really not a safe instrument to actually trade at this moment of time, mainly because the USD strength is going up. We've got JPY as well on the upside. Um, so they're putting it on the safe haven for various reasons. Mainly, I would guess it's mostly related to the oil side of it as well. And with that, because in Japan, you've got no oil at all, you see, so they have to buy. They are one of the major importers as well. And everything manufacturing and everything requires oil. So they need to oil the industry to actually move, and they have no oil of their own. So the transportation of oil into Japan has got a lot of impact to its economy as well. So now, okay, they can move a lot more. They've got more oil now. Suez Canal is actually cleared up. So maybe that is the reason. So that it's not about something happened that's not good and then they put the money into the safe haven. So that is not the prime motivator of why the Japanese yen is going up. So it's going up for mainly economic reasons, I would guess, not political so much. Okay. So here, for example, with oil, with gold, not oil, with gold itself, it's looking like it's not clear on any upside movement, but the bias is still to the downside. We've got higher lows as well. We've got lower, all these highs are getting lower and lower, and it's actually moving at this moment of time in a sideways type attempt, and that's trading at 1726. So I'm not looking at commodities, commodity currencies, and all that for today. We are looking at major pairs mostly. So you've got the JPY to focus on, you've got USD, you've got Euro to focus on, CHF to some extent, yes, but then it's major time, it's major currencies time at this moment of time, not exotics, not exotic crosses or minor crosses, not commodities, not gold, not silver, and all that at this moment of time. Not yet. It's not time for that. So yeah, that's basically the concentration are on major pairs as of today, maybe the next couple of days, and then other pairs might actually pick up. So GBP CAD. Okay, I just want to look at pairs that may just pop up as being really moving and stuff, not just yet. USD CAD. Let's take a look at USD CAD. Right. See whether we've got any indication right there. Now, I'll just clear off this one here. This was from before, the pattern didn't really materialize properly. As a trend didn't materialize properly. Okay, so I'm just going to clear and make a fresh start of an analysis for USD CAD. Okay, so just make sure that I've got certain, okay, everything could go. All right, there you go. Now we've got USD CAD right there. Let's go back, just start off the 30 minutes chart, give it a bit of a trend analysis type thing going on. So it has begun to, it's more, I mean, with a bird's eye view, it's more on the upside. Of course, you've got candles on the 30 minutes chart above, but then you also got this area here to take into consideration. Is it actually correcting at this moment? It looks like it's correcting as well. We've got like a double top thing going on, which basically signals downside movement. As we go on to the 1 hour chart, you see that it's still, giving us the hint of upward type strength movement more than downwards. Okay. What I can see if I were to look at it straight away on the 1 hour chart for USD CAD is this movement here. Okay. Right. And this movement here, if I double it up, okay, if I double it up, it's not moving. Give me a second. Okay. So if I double that up, let's say I pull it from there, right? From that high to the low, I double that up and then I mark it here, right? That is roughly where it could potentially rise up to before it makes a sort of downward move. The reason for that is because I think this is a potential Z-like pattern, which basically could drive price if it's bullish and it's got loads of fuel and the fundamentals and various others to drive price all the way up. It could go up to the 1.2659 area right there, USD CAD we're talking about. Okay, so then what would that do is if it start to reverse there, then it would create that it would create that C to D downward move right there, which is the head right there. And we began with the tail earlier on here. So that is your lazy Z pattern. Okay, so there is a potential for it to rise up there. If it does actually reverse and all that, then something would actually trigger it to come down, and then it will zigzag down, and it could zigzag down to this level here. But at this moment of time, with the fuel that's going on the fundamental side of it, it's driving USD up, and it's actually pulling down the CAD because of the oil prices. So very likely you could see, it needs to break out of this resistant area right here. Okay. The wick and this area. So it needs to go above the 1.26 20 area so that you can then buy at 1.2630. So we want to make sure that it doesn't actually fall here and then suddenly, just fall at a level that we don't know when it will rise up again. So it's probably best for you to plan your trade on pending order to actually buy at 1.2630, which is about 10 pips above the 2620 psychological number. So if you were to put your buy price at 1.2630, let's say 1.2630 right here. This is for USD Canadian dollar, right? Then your exit price would actually need to be at 2650 and under, because you've got your 2650 psychological level, then you've got your 2640 to exit. So you've only got 10 pips right there, right? So you see the market is not really giving you yet this very big opportunity for buy, because the market needs to regulate that. There's a lot of things going on. So a lot of people, traders, what they might do is that if they see a bullishness happens, then they will get into it a little bit too big and too fast, their order, and then they'll start to float. Mainly because you see all these lines right here. Let me just get rid of some. Okay, I will get rid of that. Now, you've got 2650 area. Okay, that's marked at 2659. But if you look to the left, you've got too many threats of price falling. You've got resistance, big resistance right here. Your big resistance is here. Okay, that's at 2680 area psychological number as well. If you pull that one down to where it has actually dropped, that has dropped 300 over pips from that level right there. So it's just too risky. Okay, but unless it's driven by very strong candles up as well, and you have got a very strong fuel for the USD. So once the USD is fueled with something that would drive the USD really strong to go over all this, then you've got a very good buying opportunity of the USD CAD. At this moment of time, if you want to buy and things, you have to be very, very careful, because to the left, we've just got too many bombs, too many resistance that might just disappoint you, and it's actually going to be very, very risky as well, because the fuel may actually be driven by something fundamental. Okay, so let's say you are looking at price going up, okay, and then suddenly something not very right happens in the US, and then some new numbers come in. And because we are expecting NFP, we're expecting ADP, we're expecting a lot of very big data as well, and then speech from Biden, we want to be on a sensitive side, because anything can actually trigger it to the downside big time or to the upside big time, because it's got a lot of data, important one as well, it's waiting for, and anything would actually trigger and cause a dominoes effect, very on a large scale. So we want to be very careful. So if you want to take the risk, yes, you can, but you need to put your losses limited 30 pips, 20 pips, at a time, so that you can enter and enter. But then let's say you enter three times and you lose three times. If you willing to lose only 30 pips per trade, then you've got less than 100 pips reserved to be willing to lose. But then, that's just a rough idea of how you can actually do your risk management a little bit more, but also on the lot sizing. Okay. So let's see, that's USD CAD. Now let's take a look at US NZD USD as well. It's very clear that it's on the downside 4-hour chart as well, but not really on the daily chart. On the 30 minutes chart, it's biased to the downside, and then 1 hour, and then 4 hour, a little bit more, but then not too long until the daily chart. Let me see whether I could actually look into some other tools, and tools right here. Let's say whether we've got any indication of strong pairs. Let me just check. Now I've got an indication here about the DAX. The DAX, which is related to the German side of it, stocks and everything else. It's on the buy side. So that might actually be what is preventing euro from just dropping all the way. Okay, so we need the news to fuel that. We need negative news now for euro. Once that comes in, then we can see more selling pressure. Now, EuroCAD, it's clear strong sell on the daily chart. Euro NZD, not a good one to look at now. Euro USD, let's just confirm. Yeah, the selling is picking up. Daily chart is showing very clear sell, strong sell actually. Let's look at others. USD CHF, USD JPY. I think USD's JPY will be clearer on the upside compared to the USD CHF. Oil is just clear to the downside. Silver on the downside as well. So yeah, we are monitoring. I think it's a week to focus on the majors, not a week to focus on very risky pairs, crosses that doesn't have the dollar and the euro. Crosses that has the euro and the dollar and the JPY would probably be better for us to focus on. So mainly the majors. Okay, you've got the Euro USD, USD JPY, AUD USD, NZD USD, everything that has the USD in it. And then that comes under the major. Then we've got the minus. Minus has got no USD in it. Okay, so Euro JPY to look at, of course, GBP JPY, all these ones against the JPY. The what do you call that? The major big pairs, except for the USD, to be paired with euro, and to be paired with the JPY as well. So these pairs, I think, would give us good indication of what to trade. So we'll monitor that, and I'll be giving you the heads up on what I see as something that could actually enter for this week or for today. Let's see how it goes onto the economic calendar as well. So we've got nothing much on the economic calendar for today on high impact news releases or data releases. So I would guess, after US Open today, then it would be reflecting of what it would like to do for tomorrow's euro data. But then Wednesday onwards, I mean Tuesday night, tomorrow night, I think it would actually go on quite a bit. So there may be more opportunities, and then we can lay it out quite well. Okay. Any questions, guys? Any questions at all? You guys are okay? If not, and no questions, then I will end the session and start to analyze the market more and give you guys more indication of where and what you can trade. Okay, brilliant. Good. Thank you, guys. Thank you very much. Happy pipping to all for the week ahead. And take a look at our schedule for the week on webinars on Mondays, Wednesdays, and Friday. You can you can register in advance and also check out our Facebook page on Bretton Financial Trading Academy, as well as our YouTube channel. And most of our videos and various other tutorials, interesting videos, tutorials, and updates will be on your YouTube channel, on the Bretton Financial Trading Academy YouTube channel. Okay, with that, guys, I want to thank you for your time in attending my webinar, and wishing you a great pipping week ahead. Bye-bye for now. Take care, guys. Bye-bye.